Hello, TikTok. Jim Malone here, coming to you live on Dallas Trading Floor. And it has been a crazy day today. It looks like the market is once again up. Boy, it is amazing. It just seems to have defying gravity here, but it is backed off a little bit. When I came on here, it was up in the morning, and then the Nasdaq had backed off. So some of my slides aren't quite the best, but let's get into it. Just wanted to show you the market direction. We are still in a confirmed uptrend. The Nasdaq is down. Actually, when this was taken, the Nasdaq was up, but it is down a little bit, and it is in the red, and I think it's going to close lower. As a matter of fact, it's interesting because of the sell-off, I did sell my Tesla. I sold it at about the 1560 level, but I also was able to transact a call, so that was pretty nice. So I made some money on that. And I'm going to be waiting to get back in when the conditions are right, but there seems to be a little bit of adjustment in Tesla stock right now. I don't think that portends anything bad. I just think that, it had run up very quickly, very fast, and again, I always try to put in a trailing stop so that I get sold out and I keep some of that upward momentum. Also, just wanted to show you the QQQ. As you can see, it's continuing to go up. It's 264. It's been really 265. It's up today, but it's backed off a little bit. And I do think we're going to see a little bit of a correction here it just got a little bit ahead of itself. And I don't quite know where it's going to go, but I do suspect that we're going to see a little bit of softening probably tomorrow. That's what it looks like to me anyways. Interestingly enough, though, the Dow Jones is up. It seems like whenever the Dow Jones is up, the S&P 500 and the QQQ, or the NASDAQ 100, they seem to be down. So we did get some nice strength in the Dow Jones today. And that may portend, maybe some people are going to take some of their profits, and they may go into value again, but I wouldn't bet on it because we're seeing a fundamental change in the economy. I think from an economy that our new industrial stocks are basically the chips, and if you're a member of Dallas Trading Floor, we sent out a trade alert last night. Actually, it was real late. I was kind of burning the midnight oil there, creating the trade. But it was a trade on Maxam, and sure enough, this morning, it looks as if Analog Devices is going to acquire Maxam Integrated Products, which is a pretty big deal. It's a $17 billion merger, and we did send out a trade alert on that. By the time I actually got to open it, the stock had already gapped up almost 10. So I had to adjust my buys up a little bit. But that's what they call a bear call spread. That's where you purchase the calls for the lower strike and then you sell the higher strike, and then that difference is your investment. And the good thing about it is if it doesn't exceed that, if it doesn't get up to the correct level, you're only at risk for the amount that the differences of those two, and you have the potential though of going much higher than that. So anyways, that was in the email that I sent out on Sunday night, and this was a bear call spread on Maxam. I don't know if it's in zone still for that, but kind of interesting, and something that you might want to possibly look at in the future. And also, you can just sign up again at Dallas Trading Floor and get that. So let's see. First question. Yes, did you sell Blink? No, I'm still in Blink. I'm still in Blink. Blink has to go down. My stop loss on Blink is about 544. I bought it for 640. So it hasn't quite violated the 8% rule. The reason why I was sold out of Tesla is because I had a trailing stop on it, and as it went up, of course, if it dropped back, then I was sold out. So I was actually sold out this morning for I guess it was about 1650. It's now trading, I think, in the $1,500 range. I'm waiting for it to base, and then I'll probably be back in again. Back into Tesla again. So that's how it works. I don't try to call the bottoms. I don't even try to do anything like that. What I do is if I'm in a stock, I will set that stop loss, 8% typically, or 7% if it's a higher price stock, typically below where I bought it. And so if it does go down, I'm automatically sold out. I don't have to think about it. And that way I preserve my capital, especially if I've got a hot stock like Tesla that keeps going up. 9 days ago, I bought in Tesla at about $9.97, and then as the stock continued to go up, I can push my stop loss up, and then when it did reverse today, I was sold out, and I was kind of surprised because I looked at my account and said, "Wow, I got a lot of cash in there. What am I doing with that?" And I found out, oh, my stop loss kicked in. But that's a good thing to have happen because that preserves your capital. And no stock goes straight up; they kind of go up and then they go down a little bit and they go up again. So that's why the stop loss works so well for me. Anyways, okay, great. So I'm still in Blink though. What's your take on ASML? Let's take a look at ASML real quick. I just want to kind of go over this stock. ASML. This is a chip manufacturing equipment stock. This is a great company, by the way. I spent about 15 years in Silicon Valley, and I worked for Price Waterhouse, and this wasn't my client, but it was a client of the firm. So I'm pretty familiar with the company. Great company. It's a Dutch firm, actually. So let's go over there and just take a quick look, see if I can get that up there for you on the screen. Sure. Okay. Okay, let's look at the weekly chart. I always tend to look at the weekly chart rather than the daily chart because it kind of gives me that, that 20,000 foot view that you kind of have to take. So let's blow up the chart here and just take a look at it, kind of see where it's at and what it's doing. Okay, so here we go. This is again the weekly chart, and again, you usually have a view. You have a daily and a weekly view. Okay, this black line here is the 200-day moving average. That's sort of your baseline, and then you have this red line here. That's the 50-day moving average. Typically, you want to have when you're buying anything, you want to make sure that this 50-day moving average is above typically the 200-day moving average. That shows that it being accumulated. That means that there's pressure buying the stock. Now, it's true that this is the volume down here, that the 50-day moving average is going down a little bit. So, but these blue bars indicate that these are pressure to buy the stock. So that's not bad. Very nice movement from the low, which we had on March 23rd up to today. So I definitely don't see any problem with this chart in terms of a buyable chart. I think this is a very, very buyable chart. Now, of course, the question comes, well, yeah, it's buyable, but what are you doing? It's off $6.32. Ouch. Well, you don't want that, obviously. So again, just because it's a buyable chart doesn't necessarily mean you want to buy it at that particular level. But let's look at some of the other fundamentals on it. Well, it's looking really good with the composite rating of 97. KLA 10 core is #1 in the space. This is the equipment. This is the space for the semiconductor equipment manufacturing space. KLA 10 core is #1. Lam Research is in there, of course. AMSL. And some of the other stuff. This is a very good sector to be buying in because I don't know if I've mentioned it before in some of my shows. We're in a semiconductor upgrade supercycle. Every 18 months, they use a different form factor in the state-of-the-art chips that are being produced. We're definitely in one of those situations. That means there's going to be a lot of buying of this equipment by companies like TSMC, Texas Instruments. They're going to be buying equipment from the SMLs and the KLAs of the world. So we're on an upswing in the chip sector, and that is a very good thing. So this is definitely buyable, but would I buy it at this price? Well, you know what? I want to see this. I want to see a little bit more stability here before I would be necessarily a buyer. I think we have to wait until we have an actual base. Now, what do I mean by base? Well, there's about 7 bases, and what happens is that stocks don't go up totally in a straight line. What they'll do is they'll get up to a certain place, and then they'll create a base, either a 3-week tight or a cup with handle or that kind of thing. Now, this is definitely not a cup with handle, and it's not a 3-week tight, so I don't think this is really based yet. Buying it in this position is a little bit more risky if you're entering in this position. Now, the correct buying location for this probably, let's blow up the chart a little bit, probably was right about here, where you see this 3 weeks, and it's a kind of a 3-week tight chart. Basically looks like at about 355, around there. So that would probably have been the buy point. I think we're extended beyond the buy point, but I want to see some more consolidation before I would buy this. It's a buyable chart. This is a watch list, but I wouldn't be buying it. I would wait. This is probably going to move and base a little bit more. I think probably in maybe the 365, 370. Who knows? But I would wait for it to sort of settle in there before and create a base pattern about 3 weeks tight. So this is not buyable at the moment. But again, it's a very good company, and it's definitely a watch list. So it's a buyable chart. It's just not a base that you can buy off of. So there you go. Can you access a call option on TTD? Boy, this is one of my favorite stocks. This is the trade desk for everybody out there that doesn't know what this stock is. And basically, it's sort of been, for the internet advertising space, it's sort of been a duopoly between Facebook and Google. They sort of place a lot of the ads, but now the trade desk has a really interesting take on it. They basically place ads against all the other sites. So it's a tremendous company, and it's had a really, really good run. Now, so let's take a look. I just want to take a look at the chart before I start talking about potential options on this and ways that you can play the options. What I would do on this one, yeah, it's it's down $30 a day. This is a highly volatile stock, so it's not something that we want to be, this is a highly volatile stock, and it looks like it is going to make a little bit of a movement to the downside. So I hope that if you did have a stop loss on this and it was 8%, I hope that you got out, because we may see a little bit more weakness before it continues on up. I'm just looking at this pattern. Yeah, we definitely had a retracement here today. So let me blow up this and look at it. Okay, so it looks to me like there is at about the I'm going to say at about the 400 level. That's sort of where I see it being solid. But let's kind of look at the option chain really quickly here for TTD. So let me go pull that option chain up and see if I can come up with something that resembles something that's buyable. So let's look at it. And I'm going to look out into August. Now, here's the thing: when you're buying options, I typically like to be a seller of options more than I do a buyer, especially of call options, because when you're a seller of call options, typically you're going to win about 70% of the time. That's just the averages in the market. When you buy an option, you typically are only a winner about 30% of the time, but a lot of times you win very big. So I'm not saying don't buy call options, but I'm saying if you buy call options, you need to hedge them. And my favorite hedge is a bull call spread or a bear call spread. Now, what's the difference? Well, with a bull call spread, what we're doing is we're basically buying calls, but we're limiting our upside potential risk by also buying calls that are at the same expiration, just at a higher strike price, so that we're capturing the movement in between both strike prices. I'll show more about this later. I'm going to probably do some educational videos on it. It's very, very powerful, but I recommend it rather than just buying a naked call, because the problem with the naked call is, first of all, if you run out of time, boom, you're out of it and you lose the money. And secondly, sometimes you win, but a lot of times you don't. So I recommend, instead of buying the naked call, possibly doing some kind of a vertical spread. And that's the two that I really like are the bear call spread and the bull call spread, because they're just very easy to use, and they work very, very well. And you can size your position with the number of contracts that you use. So I get on and on about that. So let me go ahead and look to see, what kind of call. Now I'm looking at the August 6th, 17th expiration date. So let me kind of look at the most actives here really quickly to see kind of where the action is in this particular strike. So I am seeing, all right, wow. I am seeing a lot of interest. Boy, these are all expensive. I'm seeing that's the January, most active calls. This is July. All seem to be July 7th. It seems to be that around the 460 strike seems to be the one. Here's what I would do on this. It's now at 434.14. You know, I would do a. This is really tough. I would do a bear call spread on this one. I would do I would do a bear call spread on this one. Probably I would do a bear call spread on this one probably, and I would basically be a seller a seller of the July 17th 450. That's what I look. So look around that 450 level in July 17th, or if you're going out farther, just that 450 level I think is going to be the best. I can probably give you some more information quicker a little bit later date. So there we go. That's my suggestion on there. Yeah. They're low now. Yeah, they are definitely low in price, but that's because that is fallen. Now, here's the one thing you can kind of judge the way the market is looking at the potential motion on a stock by looking at the change in the calls about 8 weeks out, 4 to 8 weeks out. That will give you a kind of a tell on whether or not the market is seeing it accumulate or not. So that's kind of an interesting thing, way to look at it. All right, what do you think about FSLY? Is it just a profit drop? Wow, I don't know, because I'm not in FSLY. I'm just going to look at the chart. FSLY. Let me see if I've got anything there, and that is Fastly. All right. Yeah, look at that come way off. Yeah, we're starting to see a shakeout a little bit. I mean, that's part of the reason why I was kicked out of Tesla today, is because we are seeing some weakness. That, you know, the Nasdaq has run up really hot and heavy, and I think we're seeing a pullback basically to the support. So let's see if there's. Hard to say on that. Okay, the support in here is probably, wow, I think this thing could easily pull back to about the 73 level. Just my opinion, but I definitely think it could. So if you're in this thing, always remember, if you buy something, you want to put that stop loss of 8% on it, because when it does pull back like this, you want to keep as much of that upward profit that you can. Okay, yeah, here we go. This is another great question. How much percentage trailing stop do you use, and the broker who supports it? Well, I'll tell you what, I primarily use TD Ameritrade. And when I first enter a position, I always put in at least a 7 to 8% stop. Now, how do I do that? Well, if the stock sells for $100, I'm putting in a good till cancel stop order on there for either $93 or $92, depending on if the stock is over $100 or under $100. Typically, if it's under $100, I'll typically give it a little bit more leeway at about 8%. If it's above $100, I typically will go a little bit more conservative with 7%. And what this does is, and this is just a stop order with just absolutely a limit order, not a trailing stop. Now, when the stock starts to appreciate, like with Tesla, what I will do typically with there is then I will convert it to a trailing stop loss, especially if it's up more than 10 or 20%. I will start to do that. But initially, no trailing stop loss, 7% or 8% down, depending on whether it's over $100 or under $100 of share. And I use TD Ameritrade, and always good till cancel. And it's funny because I was not thinking that I was going to be sold out of Tesla today. I was surprised. I mean, I looked and I looked at my account, 9:30 in the morning, and boom, I'd already been sold out. Well, guess what? It's interesting because it foreshadowed the drop in Tesla. It went up to about 1740, but then it came right back down to 1500. So I'm actually really glad that it happened. At the time, I thought, darn, I got stopped out. That kind of stinks. But that's why stop losses can be really good. They can protect some of your profits. All right, check out Blink, BLIN. All right, let's see what BLIN. I don't know what BLIN is. I have Blink, but I have Blin. BLIN. Let me take a look at this one. Yeah. All right. Well, this is, wow, this is, okay, this is a very inexpensive one. It is, it's an okay chart. I don't like it. It's got good relative strength, though. I will say that. It does have good relative strength. So, yeah, let me put it up on the screen. That's yeah, it's not necessarily that bad. I mean, it's an internet networking group. 94 is the relative strength. That's not bad. It's up 1 cent. The problem with these though is that I don't think at this price. I think that you're better off kind of looking for something a little bit better than this instead of this. Let me show you one that I think is really good because it's a lot stronger in terms of its relative strength. And I just want to show you this really quickly. Here. So let me go ahead and pull that up on the screen because I had this on one of my slides. So let me pull this up, and this gives you kind of a good idea of one that I think, definitely is top rated and it is cheap. So it's kind of a good thing. So here we go. Let me blow this up a little bit here. Oops. It's going to be right view. Need that there, present. There we go. Okay, so now we go. See it. All right, this is a stock called Paysign. Okay, why do I like Paysign? Well, one of the reasons I like Paysign is because it's a sector leader. You don't have to buy necessarily a bad stock that's not a sector leader. Now, do I like this chart as much as like other ones? No, because it was way up here and then it's moved down, but it is moving back up. So things are getting better here. This is the low on the 23rd. Typically, when you're below $10, you're not going to get the best chart patterns. It's just that's the way it works. But here's one that's $8.89. Again, this is not. I'm not recommending this. I'm just showing you why I like this one. It's basically in the industry group is 38 out of 197. That's excellent. It also has a 97 composite rating. There's only 2 positions that are better, 98 and 99. So that's pretty decent. And it has a relative strength. It's pretty good. I think that's a 59 relative strength. Let me see. No, no. Okay, what's the relative strength on this one? Yeah, okay, the relative strength is an 89. It's almost a 90. That's pretty good. Anything above about an 80 is a really good relative strength. So instead of buying that other stock that you showed me, why don't I take a look at this one? It's called Paystop, Pays, and that's kind of my recommendation if you want a low price stock that's got a good chart pattern and is relatively buyable. All right, so let's see. Oh, hey Wendy, thanks for watching me on Twitch. And by the way, everybody out there, I'm on Twitch, and I'm having trouble with Facebook, but I am on Twitch, so I really appreciate you looking at me on Twitch. And I'm also on YouTube at youtube.com/DallasTradingFloor, and I am on Periscope at pscp.tv/DallasTradingFloor. So that's great too. All right, so good to go long on PayPal. This is one of my favorite stocks. And by the way, the company that I just showed you on the screen called Paysign, that's not as good a stock as PayPal. No way, no how. But it's in the same group, and I really like this group, the Internet Payments Group, PYPL. PayPal is the new bank. It's the new MasterCard, in my opinion. I mean, why go with today's technology when you can buy the very much better technology, PayPal, for less? And let me show you that one here. Okay, great. Here we go. I'm going to switch to the weekly chart because it's easier to see the trends from 25,000 feet than it is from 3 inches. And that's why I go to there. Okay, and it looks like it's down $5.52. Again, I think, you know, there's a little bit of sell-off. But I like PayPal a lot, and I do think it's a good long. But remember, anytime you buy anything, you want to put that stop loss in there to protect your downside, because you know nothing goes up or down in a straight line. So here we go with the weekly chart. Okay, it does look like it is consolidating at this level here. This is a very bullish chart. You have the 50-day moving average moving above the 200-day moving average at this cross. Typically, you want to always try to buy a stock that has a ascending 50-day moving average over the 200-day moving average. That means that it's being accumulated. There's pressure to push the price up, typically by institutional investors. Also, look at the volume here. There's lots of blue bars. I like to see those blue bars because that means that they're buying at the higher of the bid ask. So this is also good motion here. Now, where would I buy this one? Well, I would wait for it to settle, and I think that it's probably buyable. I don't know what the buy point is on those. I haven't done the research, but I do believe that you were probably looking for this one about 170. Maybe 172, but I don't know exactly. Let me see if I can give you an actual number for a buy point. I don't know this buy point offhand, and I haven't done the research on PayPal, so I can't tell you. But I do think this is a very, very strong one, and you know, it's definitely something that is good. So let me see if I can find a buy point for PayPal. BYPL. And I don't remember what the last buy point was on there, but let's see if I can find one. Okay, let's see if we've got a technical buy point on it. All right. You know what? I cannot find this. Well, heck. Okay, yeah, I think this was a buy. I think this is a buy point at about I think it's about 170. I'd look to possibly go in at about 170, but I have to do a little bit more research on that one. I definitely think it's a great company. I definitely think it's a good long term. So I would be looking to possibly put this in my portfolio at about 170. Adobe, wow, it doesn't get much better than Adobe. Adobe is one of the absolute cloud kings. The other one being Amazon. So let me get a chart on Adobe. See if I can give you. Yeah. Can I do it? There we go. Let's see. A, D, B. That's right. No. What am I going wrong here? Let me get the chart on Adobe. ADBE. I misspelled there. So let me get the around ADBE. Okay. Here we go with Adobe. Ooh, down hard. Seems like there's a sell-off going on here. Looks like this might pretend at least until the end of the week. So we might want to start possibly taking defensive actions because this stock, Adobe, is a bellwether, and when you get a sell-off like this, it can be, okay, yeah, and it's down in after hours as well. So, not time to buy right now. Not time to buy. If again, remember, always have the stop loss on this. If you do, and you get stopped out, no problem. You can buy this when this reconsolidates. But it looks like it's moving down to support, and the support looks to be at about 420. So 423. So it probably is going to move a little bit down, a little bit more tomorrow, and then possibly head back up. But I'm looking at no. Okay, I'm sorry. I'm looking at about a 442 price on that. It's 443 right now. It's actually up after hours, so it looks like it has hit bottom. See what happens tomorrow. See if it confirms it's in a confirmed uptrend. Always try to buy an uptick. Seriously, it will save you money over the long term. Don't try to average down or anything like that. But if you are in the stock and you had the stop loss on, you probably will have been stopped out at 8% down. So that's typically what will happen. So let's see. Okay, California is shutting down. Is the market? Yeah, God, I know. I know. I have a house in California. I'm from California originally, and you're right. They're going crazy out there. They I don't know what it is. No, I don't think the market. I think the market just has gotten a little bit ahead of itself. I think we're going to probably see an adjustment now, probably for a week or so. Maybe not. Maybe shorter. But we're definitely still in a confirmed uptrend. I just want to make sure that everyone knows that we're still in a confirmed uptrend. But here's what's going to happen. The weaker stocks are going to get shucking out. So if you have stocks like the airline stocks and stuff like that, please sell them, because the numbers are not going to be good from the airlines and the resorts and all that stuff. Disney is going to be, Disney is probably a short. Now that said, there's other stocks out there that I think are going to do great, and one of them is one of the ones that I've done very well with in the last about week or so, a little bit longer than that, about 3 weeks, and that is Netflix. So there is stuff out there that we're not. The funny thing about the market is that there's always somewhere in the market that seems to buck the trend. So let me just show you the chart on Netflix. Now, why am I putting this one out? Well, this is one of the FANG stocks that's doing extremely well. Okay, because the Hollywood movie companies, they can't, because of the COVID-19 thing, they can't put out their movies, so they're having to go to Netflix to put out their movies. So this is the kind of thing that again, the Teledocs of the world, the Netflix of the world, they're probably going to do well, and they're going to probably be a little bit more defensive. But we are going to probably have a little bit of consolidation, at least for a week or so. So be ready for a little bit of a turbulence, because I do think that we may see a little bit of turbulence. So let me see. I've been neglecting the people on TikTok here, so I got to get to it. Jim, what happened to this market this afternoon? Well, we had a sell-off. This is what they call sometimes a distribution day. This is when people say, wow, I've made a lot of money, I'm going to sell. And as a matter of fact, that happened to me, because I had a stop loss on my Tesla. And I 1 minute I was looking at the screen, I was like, oh yeah, it's great. And then all of a sudden it's like, why do I have all this cash in my account? Where did it come from? Well, it sold off because Tesla went down more than 8%. So we're probably going to see a down day tomorrow, maybe this week. But we're still in a confirmed uptrend, so I just wanted to tell you that. But we had a little bit of a distribution, looks like. Bitcoin market. Well, the only way I really recommend playing Bitcoin is with the Greystone Bitcoin Trust, which is interesting. It's kind of an interesting vehicle, because it's called GBT. I think it is GBT. Yeah. No, Grayscale Bitcoin Trust. Yeah. Okay. GBTC. Excuse me. I always get that wrong for some reason. I don't know why, but I do. So let's look at let's look in on the Bitcoin land. Why do I use this one? Because this kind of gives us a good chart that we can see kind of where Bitcoin is going at the moment. So I'm going to put this up on the screen. We'll take a quick look at it. We're going to look at the weekly chart here, and I want to show you this because I think it's very indicative of kind of where we're at in terms of Bitcoin. Now these numbers here are the price of the ETF, the GBTC Bitcoin Trust, which holds about 4% of all the Bitcoins in the world. Now, as you can see, we did have, this is a good motion here. The 40-day line did move above the 200-day moving average, but it's moving, it's kind of going down. So I don't think in the next few days we want to be in Bitcoin, because I don't think it's got enough power. We want to see this 40-day moving average solidly above the 200-day moving average. I don't really think that this Bitcoin is viable until GBDC goes above 1745 or thereabouts, because right now, the way I'm reading the chart is, Bitcoin is in a downtrend, at least temporarily. So we probably don't want to be, if we don't have any positions in Bitcoin, probably not want to be putting in new ones right now. So your best guess at what happened today? It was just fear. Yeah, I think it was a little bit of fear, a little bit of profit taking. I mean, look, I bought Tesla basically, about a little over 9 days ago, and I bought it for $9.97 a share. Well, it went up. I mean, I sold it today this morning. Well, I didn't sell it. The machine sold it because I had the stop loss at 1669. I mean, that's nuts. No stock should go up that quickly. You see, that's the thing. It's going to readjust. I don't necessarily think we're going to break trend. Now, if this goes on for a week and we have lower lows for a week or so, then we will have changed. Then the trend will have changed. But right now, the trend is still up. So, but you want to get ready to protect your positions. Remember, have your stop losses set wherever you bought it. Times 0.93 is going to give you the amount that you set the stop loss, and just set it in there. And I know that it sucks if you get stopped out, but here's the thing: it's a whole lot better to get stopped out than come back when the market is trending up. You only want to buy an uptick, because buying on a downtick can be very, very costly sometimes. Thoughts on Coop? Coupa Software, good company. Let me see if I can give you some insight on Coupa Software. Okay, so I'm bringing it up now. Yeah, it's down strong today. Yeah, this is a sell-off in the market. It's some profit taking is going on. This happens. I mean, when stocks run up this quickly, hey, sometimes people take their profits, and I think that's what's happening here. Remember, if you have the stop loss in, you're going to be protected because you're going to be sold out. It's going to be frustrating, but you're going to be sold out and you're going to preserve your capital. This is the reason why I so recommend doing the 8% rule. Again, the amount of what you paid for the stock times 0.92 is going to give you the number, and that's where you set your stop loss, and you set it good till cancel. And that way, when they get these corrections in the market, you're kind of protected on that. So, but I do think that this is a generalized pullback. It doesn't seem to be, from what I can tell, anyways, it does not seem to be an overall pullback from the market. It just seems to be a correction. So, let me just take a quick look, and I want to see how the SPDR did. That's SPY. And by the way, that is the largest ETF. I want to see how the SPDR closed. I didn't get a chance to take a look at this before I went on air. I had a gentleman come in today, and hopefully we had a really nice talk, and hopefully we'll be doing some training for for charts and that kind of thing. So it's pretty exciting. Here we go. So let's look at the SPDR for today with where it closed. Okay. Yep, definitely closed down. Moving back towards the, okay. So yeah, it's weakening. The upward movement is weakening, but at after hours it's up. So yeah, I just think this is basically a a pause in the market. It's pulling back a little bit. People are taking some profits. I want to take a look, and I haven't looked at it today. I'm in a stock called KL. It's a gold mining stock, and I do think we may see some inflation towards the end of the summer because there's been so much in the market. Okay, it's down too. Okay, so go figure, right? All right, so it's down about $1.80. Wow. Okay. Well, there you go. So the market is just down basically all throughout because it looks like there's been some profit taking. So hopefully that won't continue. What do you think of Bridgeline Digital? Oh, BLI, I think I covered that one. What about Shopify is a good price to buy now? Wow. The thing about Shopify, I think it's probably, I don't know if I would buy it right now just because, at least today, but I do think it's definitely should be on the watch list. Let me just take a look to see if there's a buyable pattern on Shopify. And I'm going to pull that up in just a second. It's Shop, of course. And it's a tremendous company. And hopefully, I will get a tremendous chart here. So here we go. SPSHOP. See if I can get, well, if I could spell it would be great. Okay, here we go. SHOP. SHOP. All right, so let's look at the Shopify chart. Well, it's down significantly. Yeah, there's just profit taking all across the board. Yeah, it's just profit taking all across the board. Where is a good place to buy? Okay, the last buy point was about 900. So we're about 68 above that. So let me pull that up on the screen to show you. And see, where am I getting these buy points? Well, what I'm doing here, and this is I'm just estimating it, is that you can see that there's a little bit of motion here and then it comes way down. Well, that means that the support is probably, the next support is right at that level. So let's blow up the chart a little bit and I'll kind of show you how I come at that. And I'm just eyeballing this. I haven't actually done the research because, there's a little bit more to this than just, eyeballing it. But I'm going to put it, again, always use the weekly chart to find the buy point. Put it on a large chart. There we go. And then, as you can see, this bar here is where it came down. There is some support right about this level. I'm just putting the cross on it right here now. So it looks like there's support at about, I'm looking at support at about the 905 level, 900. So in there, from about 900 to about 905, there's some support. So it very well may pull back to that line. So I wouldn't buy it right now. I would wait until we saw some support, probably about the 900 level. If it moves to the 900 level and then it starts moving back up, you want to get it when it moves up. So that's what I mean by buying on the uptick. You don't really want to, if a stock is adjusting, like everything pretty much is right now, then you want to wait until it gets to some support, and then once it moves off of that support, that's when you want to possibly looking at buying it. That's when you possibly want to look at buying it. During the online Corona time, what do you think about K through 12 learning? And I don't know TWOU. That's a really good question, though. By the way, I do think though there are some in the learning space. I'm just trying to think of something that might work well, but let me look at TWOU. So if I can, it's true, there's so many companies that are entering this space, I can't keep up with them all. But right now, the largest nonprofit educational company, believe it or not, is Arizona State University. Sun Devils. Okay, 2U, yeah. Look at that, very nice chart. Very nice chart. Okay, I'm going to put this up here. I'm going to switch to the weekly chart again, like I normally do. Now, here's the thing. It's still okay. It took a big hit when we had the downturn, but it seems like it's been coming back ever since. So let me pull up the chart here with this one. It was trading a much higher level, and then it moved solidly down, and then it looks like it's getting strength. Here's the thing: I wouldn't be in the stock really until, and this is kind of amazing, I would want to see this be at least. I want to see this be at least 75 before I would buy it. 2U Incorporated. TWOU. I just would, because I want to see it regain the prior high here. I like to buy stocks, especially on like this, on higher highs. So I couldn't recommend this one right now. I don't think it's not a bad chart, but it's not buyable because it hasn't achieved a high enough high yet. So I know that sounds kind of crazy. Why would I say that? Well, because everybody likes to get things on special, but in stocks you don't want to buy stocks on special. They're on special for a reason typically. You don't want to buy when the stock is moving down. I know this sounds like Captain Obvious here, but it's really true. Most people will say, well, gosh, it's such a bargain, I'm going to buy it, and then, maybe it'll come up. Well, that isn't really what moves stocks. Unfortunately, when a stock is trending down like that, if it's not a profit-taking day, like it is obviously today by looking at a number of these stocks, then it will continue down. So in order to conserve your cash, you want to wait until it's on an uptrend, and typically it's at a higher high. That's going to give you your better entry point. Gold, GLD. Yeah. Thank you, Arnold. I hope you're having a good day out in beautiful California. I wish I was out there myself today, but I am not. I am here in Dallas. But it's quite nice here in Dallas, so I have no complaints. This is the Spider Gold shares. This is a really good way to play the gold market, because with the Spider, it basically buys all of the best of the best. So you're getting a kind of a very defensive position, which I particularly like in something like gold that is a commodity, because there's not a whole lot of moats around gold. It's, you got the gold or you don't. So I like the Spider very much for playing the gold shares, and it looks really good. Now, the way you buy an ETF is different than the way you buy a stock. And I keep saying, when you're buying a stock, you want to buy on a higher high, and that's true. With an ETF, interestingly enough, it's the opposite. You want to buy when it's lower, going higher. I know this is just weird, but the reason is because an ETF has it has many stocks, so it's much more like you buy something on sale. So definitely, when something like the GLD goes on sale, you want to buy it. So that's kind of a weird thing. On the one hand, I'm saying, well, don't buy this chart because it needs to go to a higher high. That's true of stocks, pure play stocks, absolutely. But with ETFs, if there's a little bit of ETF, it's okay to buy it because of just the way it operates typically. So, but I definitely like this one. If you're going to be in the gold, this is a good way to do it. This is kind of a set and forget. You're not going to make as much money as you're going to be in a pure play, like a Franklin-Nevada FNV, but you're going to do probably very well. And I do think that we're going to see some inflation before the end of the year. Now, you see, there you go. Today, Franklin-Nevada was down. I've been photobombed. I've been photobombed. I just don't know what I'm doing in terms of operating this machine. So there we go. Franklin-Nevada, which is the top-rated gold stock right now, it's down today, but gold shares are up. So that tells you that it's probably good to buy the ETF rather than the shares. Now, I for full disclosure, and I want to show you my portfolio so that you can kind of follow along at home and see if I'm not pulling your leg or anything. This is my current portfolio, and I just wanted to show that to you really quickly. Here we go. And basically, I'm going to put this on there we go, present. Okay. Basically, here's what I've got in my portfolio currently. Again, as I said, I sold out of Tesla. So I have Netflix, Viva Systems, Teladoc, Blink, Kirkland Lights Gold, and this company called Maxam. And what is Maxam? Well, this is a company that's being acquired by Analog Devices. And I don't actually own the stock of this. I have what they call a bull call spread. And by the way, if you're interested in doing trades like the bull call spread, I put out my free trade alerts. I'll just put this right up on the screen so that you can see it. And basically, this is it. Just go to DallasTradingFloor.com and it's totally free, and just subscribe. And if you're on TikTok and you want to see this, it's available. Just go to my profile and then hit on that link, and then it has a sign up for the free trade alerts. And by the way, if you want to see all of the charts and everything like that, all the programs are recorded on YouTube. So it's youtube.com/Dallas Trading Floor. And of course, this is Dallas Trading Floor number 86. All right, so let's see. Is NIO a buy? You know what? I would hold off on NIO, because here's the problem with the Me Too companies in the electrical vehicle space, and that's definitely what NIO is. NIO, for everyone out there that doesn't know, is a electric vehicle company. It's a Chinese company, and you know, they actually are, in many ways, they're better than some of the other ones, because I do believe that they can actually produce a product. This is the problem with companies like Nikola and companies like that. They don't have the capacity right now, unfortunately, to produce vehicles. They're not capitalized. They don't have the production facilities, but NIO does, because it's in China. But here's the thing about the Me Too's. I just think that it's going to be Tesla and a lot of other people, not so much. I think it's going to be Tesla, and then it's going to be one of the major automobile manufacturers like a Ford or a Volkswagen. I think that's sort of going to be how it goes. And of course, it's down today, unfortunately. And you know, I think this is a little bit risky to buy NIO. If you're not already in NIO, you know, you probably don't want to necessarily move into it strong, even though, as you can see, it's number 2 on the list. Tesla's number 1 and NIO's number 2. Actually, that isn't really true. Tesla's number 1 and NIO is about number 20, because basically, right now in the electrical vehicle business, there is Tesla, and then there's everybody else, and that's kind of the way it is. So I'm not really high on NIO. I don't like the chart all that much. It does have a blow off top. You can make money in it. It does have a 92 rating. That's excellent, and it's got a very strong relative strength at 99. So people are buying this. I mean, they're buying this company. So I think you possibly can make money, but I don't like it. I rather would buy quality than NIO, and I don't think NIO is quality. Just my humble opinion. I think right now there's only really one company in the space that is Tesla. So, okay, let's see. Monday greetings. Hey, thanks, man. Send those vibes my way. I need them. Okay, what is your thoughts on Tesla? Do you think it's going to drop? Well, I do think it's going to drop maybe in the short term, but you know what? I think it's going to be a $2,000 stock by the end of the year. Now, will it go straight up? Probably not. I sold out today. Why? Because I had a stop loss. Not because I woke up and said, I think Tesla's too high, I'm going to sell it. I don't do it. I don't make that decision. Try to automate your stop loss, because if you overthink it, then you can lose more money. So set that 8% stop loss, and then if it trips, you go, oh well, it's tripped, and so what? But you capture all that gain. No, I don't think it's the end of the line for Tesla by a long shot. I think they're going to gather strength, but are they going to hang out at this? I think there's definitely resistance at about the $1,700 level. That's what it's telling me. It's telling me that, you know, it's gonna probably play around between about 1550 and about 1750, and it's going to play around for a while until Battery Day, probably. Well, that's the thing that Elon Musk is talking about. That, and they lower the price on the Model Y. Well, everybody's thought, oh my God, that's so horrible. Well, I actually think that's a great idea, because they're just going to freeze out every other competitor. Every other competitor they're not going to buy the other brand. They're going to buy the Tesla because of the lower price. So they're going to freeze out everyone else. So I actually think that's a good move. But in the short term, stocks just don't go up by 60% in 2 weeks. I mean, they don't. They correct. It doesn't matter if it's Tesla or a rocket ship, which kind of is. I do think it's going to correct, but I do think that there's a range, and I've been looking at it very carefully, from about 1550 or 1500 on up to about 1750. I think we're going to need to see some more power to get through that 1750 trading range. So that's kind of what I'm looking at. I'm looking to see some support at about 1550, and then when I see some support, I'll probably be back in, and then I'll probably trade it up to about 1750. at least until then, at least until it moves beyond that, I think that may be the trading range. But who knows? One day does not tell the story. That is for sure. But I don't think it's the end of the line for Tesla by a long shot. I think they're just gathering momentum. All right, so let's see. EQ is my biggest winner today. Awesome. Awesome. Let me take a look at EQ. I wasn't in EQ. Okay. EQ. Wow. Okay. $23. That's unbelievable. This must be an acquisition course. Develops products for. Okay. Well, there you go. Hey man. This would not be a pick for me, but awesome that you got in on this. This is great. This is a kind of chart that I can't tell you if it's good or bad, but there's a lot of upward momentum. I tell you what though, I would lock in my profits like pronto on this because I think it's going to correct a little bit. Not necessarily going to correct all the way down, but I think if you can, you want to throw those stop losses in there so when it opens tomorrow, and it looks like it's going to open a little bit lower because it's already down in after hours, I think you want to, I think you want to kind of put the brakes on it and maybe sell it out until you can, until it stabilizes. Keep your gains. That's the name of the game, and this is a very volatile market, so try to keep your gains. All right, so, okay, cool. All right, what do you think of Blink? BLNK. Well, I actually own Blink. I may have regretted owning it, but I did buy it, and for everybody out there, I bought it at $6.40 a share. This is Blink Charging Network, and what it is they produce. Oops. Well, it would help if I I tell you that spelling is not my strong point. All right, so let's go back here and let's get the symbol right so that I can get the chart for Blink up here, because I actually do own Blink and I think it's really interesting. I wasn't going to buy this, but I saw it on my list. I was making my under $10 strong list. It was making all the screens, and then I said, well, I have to go look to see if this thing is real, and it happened to be one of my neighbors, and I went by, looked at it, and I thought, wow, this is pretty cool. So let's look at the chart on Blink Charging. So here we go. And let's go to the weekly chart, because I think it's a little bit misleading. Yeah, there's a weekly chart. Good. All right, so let's go back to Blink Charging. Yep, it moved way up to 9 and it's back down. Hopefully it's going to find some it's going to settle in about the 6 level. It looks like it's about 590 up in after hours. Seems like it's finding a floor there in about the $5.75, $1 a share, up to about the $6.50 share or so. By the way, in order to protect myself on this one, I bought 100 shares of this, but I did what I almost always do, and that is I sold a 10 strike call, so for a little bit of protection there on it. But yeah, I don't see any reason. It depends on where you're in the stock. But if you buy the stock, you want to put a nice, you want to put a stop loss on this one. Now on this one, I have to be honest with you. I did a 15% stop loss. I normally don't do them that high. The reason I did it is because the price is under $15. So when it's under $15, I typically set my stop loss at about 15%. If it's over $10 on up to about $100, I'm usually in the 8% range. And then if it's above that, I'm typically in the 7% range. And I just do that religiously, and it helps me a lot. So that's kind of the thing. But I think Blink, Blink is kind of a cool thing. I hope it does well. If not, I'm protected because of my stop loss, and you should be too. Which stop loss are you using for your ratings of stocks? Well, I am using probably what I consider to be the absolute best source out there. And interestingly enough, this is not the most expensive site by a long shot, but I do believe it is by far the best site in the world, and it's Investor Business Daily. And I'm going to show you the front page, the home page of this. It's investors.com, and it is Investor Business Daily. It's printed by Investors Business Daily in Los Angeles. It is, I think, the best. It's what all the professionals use, and it's what I use too. So maybe I'm a professional. Who knows? Here we go. This is the front page of it. It's Investor Business Daily. It is by subscription. It is by subscription, but that is where I get the composite ratings. What I love about this is that every night they go through all the stocks that are traded, pretty much on all the exchanges, and they run them through their screens, and they create these ratings. And it's really, really helpful because with the composite rating, I can quickly look at the number and know kind of if I'm even interested in trading the stock or not. I typically try to trade only stocks that are above 80 composite rating. So I typically try to eliminate 80% of the market. It's kind of like the 80-20 rule. If you trade in the top 20%, you're going to get the superior results, and that's how I do it. So again, this gives you the whole breakdown on the front page. And by the way, this front page here, it's not, you don't have to pay for this. It will allow you to come in. Now I do have a subscription. It has my little thing here. It says that I have a subscription, but it will let you see, I think, a little bit of information if you don't have the subscription, but it's well worth it. But as you can see, it shows the NASDAQ going down 2% and the S&P off about 0.93%, but the Dow Jones is coming up. So it gives you market direction, and that's a very important thing. So that is the Investor Business Daily, and it's just something that, they have a digital version that is got a good price and is less expensive. And I do think that, you sound, well, why would I ever pay for a stock like this? Well, a stock like this. Well, it's a lot easier than paying with your profits, because with this, if you trade the IBD way, there's a very good chance that you're going to make money, and a lot of other people don't trade with the IBD, and they don't make as much money. So I've been trading with these guys for about 20 years, and that's how I learned how to trade, and it's how I've made a lot of money in the market. It doesn't always work, but it's pretty good. All right, so if I can get on the spot at 194, where should I have been? Okay. If you're going to, let me just show, this is a question from TikTok. And the question was, if I could get in on Spotify at 194, where should I set my stop loss? Well, it's very easy to figure that out. And the way you figure that out is all you do is you go, and I'm just going to do this real quickly, and hopefully I can show you, maybe I can put up I don't know if I can do it here. Maybe I don't know if I can. Let me see if I can put up a calculator on here, so I can show you actually my thinking on this. Okay, here we go. I'm going to show you this calculator on the screen. So this is how I would calculate a stop loss for Spotify. You take $194. That's the price you pay. Well, let's hope that I get it right. Okay, so clear entry. So 194. Oops, why can't I do that? There we go. All right, $194, and then I multiply that times 0.92. Okay, and that's going to give me where the stop loss should be. My stop loss for Spotify should be 178.48. That's where I should set it. And then what I should do is I go in there and set it good till canceled. So that and that's it. I just put that in there. Sell however many shares I bought, 100 shares, let's say, at 178.48, good till cancel. You're covered. And this is the way to do it. This way, you'll never lose more than 8% of your capital at any time. So what you're doing is you're minimizing your losses and you're letting your profits run. So that's what I do on Spotify. Well, I have two more because I am coming, unfortunately, to the end of the hour, and I really appreciate everybody here taking a look again. And by the way, I do have trade alerts on my site at www.dallastradingfloor.com. Just sign up and we'll get them right out to you. And I have them basically basically I try to do this before I do the trade, and I try to do it a very kind of detailed, my thinking on how to do the trade, what it is, blah, blah, blah. Okay. Mako, I don't know this coming. Okay, well, this is okay. Develops online marketplace for, okay, well, this is interesting. I think I don't know if I would be in the stock though. I just don't know about this. It's down $53 today. That's an awful lot. And it's closed at 981. I don't know. I think I would want to see where it's going. Let's look at the weekly on it. Let's see how it is trading relative to everything else. Okay, so let's look at, this is the weekly chart here, and let's blow it up a little bit so we can kind of analyze it more carefully. All right, so it looks to be that there is some support, barely support, at about the 946 level. My guess is we're going to see this move down, and then we're going to watch it tomorrow to see if it sees some support at that level. If it does, then, and it moves up, then it's potentially a buy. But right now, I would not be buying this, and I would make sure that I have my stop loss set, because we could break the pattern at this point. Typically, when you have this kind of a, but here's the thing about this is not a gap down, by the way, this chart. So let me go back. This is not a gap down. Do you see how it starts above and then it falls below? This is going to recover probably into, gosh, this is probably, you're going to probably see a recovery on this one into maybe the 1025 level tomorrow. I suspect that this is a reaction to the rest of the market sell-off, and I think this is, we possibly had a distribution day. That's what they call them, when people take profits and they're moving from, they've made so much money in some of the techs, they will then, sell them off, take the profit, and then possibly buy something else or wait for them to fall a little bit and buy them again. So that's kind of how it works. IDEX is the symbol here. And let's put that in, IDEX. Okay, wow, this is a cheapie. Okay, when you're trading it below $10, it's much more. The thing about below $10 shares, it's much harder to trade them because you can lose the percentage. The volatility is much higher, obviously, because they're cheaper. And this is definitely the case here. Smith, thanks for calling, for coming in with the question. I think it's really good. Here's the thing. I don't like. Let me see if I can just kind of get an idea here with this chart. No, I don't think this is a viable chart. It's just too cheap. Wait until you see some more. Wait until you see a better chart. I don't think this is a viable chart. That's just my opinion on IDX, but I don't like this chart. It's got a downward trend. The 40-day moving average is below the 200-day. Not a chart I would buy. But I do appreciate the question a lot, though. So I am almost at the end here, and I just wanted to put this up. If you would like to get my free trade alerts, they're free, and of course to subscribe, it's DallasTradingFloor.com. And if you want to see the episode again, there's something that I went through really quickly that you didn't see. That's really easy too. You just go to youtube.com/DallasTradingFloor. And if you're on TikTok, and you want to get more information, you want to get the subscribe to the trade alerts, just go to my profile. There's a link there. Just hit on that, and all I need is your email, and I'll get you started. So, for much ado, I hope to see you back. I hope to see people back here tomorrow, and I will be back tomorrow at 2:30 Central Time. Happy trading.